yesterday prices did move higher after the announcement of the blockade by the United States on Iranian-linked cargoes exiting the Persian Gulf. However, I think the price action shows that traders think that we haven't seen the end of negotiations and we're likely to see more talks sooner rather than later, and that in some senses the blockade is a bit of a gambit just to move the negotiations forward by the US. And there are questions about how much will and means the United States has to actually enforce this blockade, and whether it has the political will, for example, to actually intercept ships that are owned by China, which would of course be a geopolitically challenging thing to do. So for all those reasons, I think the oil market is not pricing in a full blockade for a long period of time.
What, in practical terms, obviously the flow of oil through the Strait of Hormuz has been drastically reduced by the war as well. What additional effect, or if any, is this blockade having, do we know, as to what can be transported through that strait?
It's a bit too soon to say, I think, Stephen. If we take the US at its word, what it's trying to do is block Iranian exports, which, as we know, have flowed freely through the strait, through the entire conflict, providing a key pressure valve to global markets. Particularly, a lot of that oil is going to China, so it's insulated China for the full impact on energy from the war on Iran. If that were to stop, it would tighten energy markets globally further. It would put more pressure on prices, and we would probably see them ratchet higher. So as I said a moment ago, it does seem, rightly or wrongly, that the market is discounting how severe this blockade will be.
And yet the damage to the global economy, could be significant maybe. If you look certainly at the latest IEA report, that the war in Iran has wiped out global growth in demand for oil for this year. That's the key line from them. But that surely points to the hit to economic growth then.
No, that's right. And we shouldn't make light of what's been going on in energy markets. It is the biggest shock we've probably seen to global energy markets since the invasion of Ukraine almost more than 4 years ago. The IEA lays it out quite clearly in its monthly report today that we're missing 10 million barrels a day. And frankly, if that continues for any length of the time and we draw down all the reserves that are out there in the world, we're going to have to close that gap by destroying demand. And ultimately that means fewer people flying, fewer people driving, fewer people going about some of the economic activity they normally go about. And so, as you say, Caroline, it will eventually hit economic growth.